It's Saturday, April 11th, 2026. You're listening to the DX Today AI Daily Brief. Today, TSMC shatters quarterly revenue records on surging AI chip demand. Meta expands its cloud deal with CoreWeave to $21 billion, and Shopify opens its platform to AI coding agents. Let's get into it.
TSMC posted its first quarterly revenue above 1 trillion new Taiwan dollars, reaching $35.7 billion for the first quarter of 2026. That's a 35% jump year over year, driven almost entirely by insatiable demand for advanced AI chips from customers like Nvidia and Apple. March alone saw revenue climb 45% compared to the same month last year. The chipmaker has reportedly raised prices on its most cutting-edge processes, contributing to an estimated 64% gross margin. The full earnings report drops April 16th, but analysts are already calling this a signal that the AI infrastructure boom shows no signs of cooling.
Meanwhile, on the cloud side,
Meta is doubling down on its AI infrastructure bet. The company expanded its agreement with CoreWeave to $21 billion, extending the partnership through 2032. The deal will tap Nvidia's upcoming Rubin chip architecture for both training and inference workloads. This comes just 6 months after Meta signed a $14.2 billion contract with the same provider. CoreWeave's total contract value with Meta now sits at $35 billion, making the social media giant one of its largest customers. CoreWeave also announced plans to raise $3 billion in fresh debt to support the build-out.
and CoreWeave wasn't done there.
CoreWeave capped off a massive week by landing yet another marquee AI client. On Friday, the cloud provider announced a multi-year agreement with Anthropic to supply the computing power behind Claude, Anthropic's flagship AI assistant. The deal will deploy a mix of Nvidia chip architectures across U.S. data centers, with capacity coming online later this year. CoreWeave stock surged 12% on the news, closing above $103. With Anthropic on board, 9 of the world's 10 leading AI model providers now run on CoreWeave's platform, cementing the company's position as the go-to infrastructure partner for frontier AI development.
Turning to the developer market,
OpenAI rolled out a new $100 a month ChatGPT Pro subscription tier on Thursday, aimed squarely at developers pushing the limits of its Codex coding assistant. The plan offers 5 times the Codex usage of the $20 a month plus tier. And for early adopters, there's a limited time promotion through May 31st that bumps that to 10 times the plus allowance. The move is a direct challenge to Anthropic's developer-focused Claude offerings. OpenAI already had a $200 Pro tier with even higher limits, so this new plan fills the gap between casual users and power developers who need heavy-duty agent sessions.
on the commerce front,
Shopify launched its AI Toolkit this week, opening the door for coding agents to manage online stores through natural language. The toolkit connects directly with Claude Code, Cursor, Codex, and VS Code, shipping with 16 distinct skills covering every major Shopify surface. Instead of clicking through admin dashboards, merchants can now describe what they want, and the AI agent executes it, from bulk SEO updates to discount applications and product image swaps. Shopify simultaneously debuted agentic storefronts, making products discoverable on AI platforms like ChatGPT and Perplexity. It's a clear signal that e-commerce is entering its agent-first era.
staying with the chip sector,
Broadcom shares surged 5% on Thursday as investors bet heavily on the company's AI infrastructure dominance. The chipmaker commands an estimated 60 to 70% of the custom AI application-specific integrated circuit market, making it a central player in the build-out of large-scale AI systems. Analysts are now projecting Broadcom could crack the top 5 in market capitalization. The company's next strategic focus is silicon photonics, a technology that uses light instead of electricity to move data between chips. As AI models grow to trillions of parameters, the bottleneck is shifting from raw compute to the speed and energy cost of data movement, and Broadcom is positioning to solve exactly that.
Now to export controls.
A Shenzhen-based firm called Sharetronic Data Technology disclosed approximately $92 million worth of restricted Nvidia server systems to Chinese regulators on Thursday. The filing reveals 276 Supermicro systems and 32 Dell PowerEdge servers equipped with H100 and H200 chips, which have been banned from export to China since 2022 without explicit U.S. approval. Sharetronic insists the hardware was acquired through legal channels, but invoices don't identify the primary vendor. Both Supermicro and Dell denied involvement. The disclosure came the same day U.S. authorities charged a Supermicro co-founder with allegedly helping smuggle Nvidia chips into China. Sharetronic stock fell nearly 10%.
Shifting to chip partnerships.
Intel and Google deepened their AI collaboration on Thursday with a multi-year partnership expansion. The deal extends Intel Xeon processor deployment across Google Cloud's AI inference workloads and includes co-development of custom application-specific integrated circuit processors. For Intel, the agreement is part of its broader 2026 resurgence strategy built around its 18A chip manufacturing process. Google gains more flexibility in its AI infrastructure supply chain beyond its reliance on Nvidia and custom tensor processing units. The partnership reflects a growing trend among hyperscalers to diversify their chip suppliers as AI workloads scale.
Turning to AI policy.
Illinois lawmakers are advancing one of the most industry-friendly AI liability bills in the country. Senate Bill 3444, known as the Artificial Intelligence Safety Act, would shield frontier AI developers from lawsuits unless their models cause what the bill defines as critical harms. That means the death or serious injury of 100 or more people, at least $1 billion in property damage, or enabling development of chemical, biological, or nuclear weapons. OpenAI's Global Affairs team has voiced public support for the measure. But AI policy experts call it more extreme than previous proposals, and polling suggests roughly 90% of the public opposes exempting AI companies from liability.
And other states are moving too.
Across the U.S., states are accelerating their own AI regulatory frameworks. In Alabama, Senate Bill 63, which would regulate how health insurers use artificial intelligence in coverage decisions, cleared the full House this week and is now ready for enrollment. In Maine, a therapy chatbot ban is heading to the governor's desk, joining Missouri in targeting AI mental health applications. Nebraska is advancing a transparency bill requiring AI chatbot operators to disclose human-like features and prohibit them for minors. The patchwork of state-level regulation is growing rapidly, with healthcare, mental health, and consumer protection emerging as the primary battlegrounds.
On the workforce front.
The tech industry shed nearly 80,000 jobs in the first quarter of 2026, and almost half of those cuts have been directly attributed to AI and workflow automation. The largest single event was Oracle, which eliminated an estimated 20 to 30,000 positions on March 31st. Amazon cut 16,000 corporate roles in January, followed by Dell with 11,000 and Block with 4,000. Yet AI-native companies like Anthropic, OpenAI, and xAI continue hiring aggressively. Critics argue some firms are using AI as a convenient narrative to cover cuts driven by overhiring during the pandemic boom.
And finally, a look at storage innovation.
Researchers at MIT unveiled Sandook, a new storage optimization system designed specifically for AI data center workloads. The system nearly doubles solid-state drive throughput for AI training and image compression tasks without requiring any specialized hardware. As data center operators deploy ever larger clusters of AI accelerators, storage bottlenecks have emerged as a critical constraint alongside power and cooling. Sandook works by reorganizing how data flows between storage and compute layers, reducing the latency that slows down training pipelines. The research arrives at a critical moment as rack-level power draws surge past 100 kilowatts, forcing fundamental redesigns of data center infrastructure.
That's your briefing for Saturday, April 11th, 2026. For DX Today, stay curious.